We all know that real estate has created more millionaires than any other industry on the planet. We also know that it has created a lot of heartache due to mismanagement, overborrowing, and just simple life events that happen to all of us. Welcome to the CashFlowPro podcast. My name is Casey Brown, and I am your fearless leader. And although we might be bourbon sipping and at times foul-mouthed Southerners, we will always do our best to be honest, straightforward, and due diligent with all of the information we pass along to you. Welcome to the show. Hey there, and welcome to today's episode of CashFlowPro, your daily real estate investing podcast and YouTube channel. I'm here today with Margaret Kozlark of Noblivest, right? Did I get that right?
You sure did. Yeah, both of the names.
Yes, good deal. I always try to at least make a valiant attempt at it. So, Margaret, how are you today?
I am doing awesome. Thank you so much for having me on the show.
Absolutely. We're glad you're here. We're glad to have you talk about, I know it's kind of the marketing technique that that a lot of people use in this industry where getting people out of the W-2 rat race, getting people out of the day-to-day grind, and realizing that there is cash flow on the other side of a little bit of uncomfortable, out of your comfort zone area.
It's scary, right? Yeah,
yep.
Exactly.
Yep. And so I'm always intrigued to get people's take on that and how things kind of line up in your world, and what makes you think that, or what makes you want to help people do that. So why don't you start out by kind of telling us a little bit about yourself, and we'll go from there.
Sure, absolutely. So first of all, I feel like I can appreciate this because I literally walked that walk, right? So I did everything you were supposed to do. I went to college. I got the business degree. I got the corporate job, worked my way up the ladder to the corner office, was making good money, but I was miserable. I was commuting long hours via train into New York City. I had little kids that I wasn't seeing, and I was just thinking, there's got to be a better way. I'm going to do this for another 30 years. This is depressing. So I ended up stopping that job and taking a job closer to my house, but I was still working full time. And again, when you've got kids, there's so much of that time that you're missing, and you just can't get it back.
Yep.
So I did end up going part-time at one point. I consulted, but I was always kind of in the business world. And then at one point I was working full-time again, but from home. And a colleague told me that she was investing with a friend named Joe Fairless, who was starting this new stuff called syndication. And I had never heard of it. And it was going to be Joe's first deal, and I should get in on it. And I was like, I don't know. First of all, I don't have any money, which I'll explain how I solved that one in a minute. But I'm like, well, let me just kind of watch, So she did a couple deals with him, and she started reporting these amazing returns she was getting. And
isn't
even more
funny,
exciting.
Just not to interrupt, but isn't it funny how there's always people out there like you just placed yourself in the position where we all want people to be, and that's just watching. Go ahead.
Yes. Well, and not only that, yes, and open to watching, right? Like open, not being like, oh, this just sounds weird, I'm not doing it. I was just kind of like, okay, I'm interested. I know what I don't know, so let me just learn. Yep. So she was doing it, and then I was like, okay, this is amazing, I want in. So that was problem one gone. But then problem two was I didn't have any money. I was a single mom at this point. I had 3 kids. Where am I going to get this money, to invest? And so again, and I have to give her a shout out. Her name's Holly Williams. Thank you, Holly. Changed my life. And Holly basically said, listen, get a self-directed IRA. You've got this big fat 401k from your corporate job. And I didn't even know that was an option, right?
Yep.
I had no idea.
Most people don't. Isn't it crazy?
And then that's the really crazy thing, Casey, is that not only do they not know about it, they just you give this to somebody else. Just, okay, I want high risk, low risk, go make money for me. Yep. And people are not involved. And I say this because I was one of them, right?
Yep.
So once I got it converted, I put 50 grand in my first deal. 2.5 years later, that 50 grand had grown to 78 grand. And I'm like, okay, I like this. And then it was lather, rinse, repeat from there.
Yep. I could get used to these returns. And
absolutely.
And I matter of fact, my go-to on this podcast, and as any of my listeners would gladly tell you, I'm sure, isn't it funny how we as real estate syndicators who basically hold the key to one of the most secure, safe investments that actually has something real, tangible real estate behind it, have
Hmm.
to basically disclose, and then disclose that we disclosed all those, right? And then,
Exactly.
but yet, and again, I just went into this on the last episode I did, so I'm not going to spend too much time on it because my listeners are probably weary of it. But then you turn around and there's the Bernie Madoffs of this world who didn't have to disclose a damn thing, and they ran
Right.
off with the money, and everybody's going, no, nobody told me that that could
Right. How did
happen.
this yeah, exactly. How could that
And
happen?
so when we look at this, and I start looking at the barricades that Wall Street has built. I look at the moat that they've built around their industry. And again, you always hear people that are working the 9 to 5 say, oh, my retirement account, I'm invested in the stock market.
Of
Okay.
course. Yeah. Or
They
mutual
don't,
funds. Don't
but
even get me started on those.
why can't I'm invested in the real estate market be the same? Why can't that roll off their tongue as well? I'm invested in the real estate market.
Yeah. So I have a couple theories about that. One is that because I think we are so indoctrinated,
Yep.
really, if you think about it, just from the time we're young, even in high school, I'm always saying there needs to be financial classes, and some of them have it. But what are they? They're how to invest in the stock market. Right? Here's fake money. Go make a portfolio. Nobody's ever talking about, cash flow, how debt can be good if we use it as leverage. None of these things.
Yep.
So I think part of it, to your point, is it's a very systemic sort of education that's always going on, where people just can't even think of anything outside of the stock market, to the point where if they do think about real estate, then they think, okay, that just feels too risky, right? There's something wrong with it. When the reality is that multifamily is one of the more recession resistant asset classes, certainly than stocks. But it's education, and it's just people have to learn, like you
Well,
said, right
and
place, right time.
that's what we as an industry have to put forth as our education. And a lot of times, and I'll tell you, it's gonna be more difficult as time goes on because I can't remember the exact numbers that fit in here, but the American or the adult attention span has gone from like it's something crazy, like from
It's like a
12
gnat.
minutes. It's gone from like 12 minutes to like 2 seconds or something. It's
Yeah.
something. It's exponentially smaller than what it was, and so trying to teach people any of these concepts has to be done through stories. It has to be done through
Yeah.
witnessing, just like you said, witnessing what's going on over here. And the other part of this that the real estate industry is really not doing all that well is any presentations that I've gotten up or went to see, like say webinars for potential investments and so on, right? And like these presenters, they've got a 125 slide long
Oh
presentation
God.
that lasts an hour and a half.
Right.
And all it does is dissect numbers and capital stacks and
And you're
percentages
losing
this and
people.
percentages that. And when really I've had multiple passive investors on this show right here
Mm-hmm.
that the very first one, I'll never forget it. I asked her and I was like, I was so taken aback with her answer when I said, "What do you look for when what's the first thing you look for when trying to decide whether you're going to make an investment with X individual?" Right? And she said, "You're going to kill me when I say this." And I said, "Well, no, I want to know because I think there's a common thread that runs through everybody that's a
Right.
passive investor, a potential passive investor." She said, "I go with my gut." And I said, "Excuse me?" Like your gut. She said,
Yeah.
"Yes, I go with my gut. Do I trust this person with my money?" And I
Which
was
is
like,
obviously important, but that's interesting because how many people love Bernie, to your point, right? But I think it's
but
the onus is on us to make a relationship, but also, like you said, to simplify these very complex terms and topics and just speak as simply as
But
possible to help people
the
understand.
bottom line is too, and it's almost getting. I've almost heard it enough that to me, it's almost infinitely more important than one more important than the other, and it's the thought. And listen to this very carefully, okay, listeners out there, listen to this very, very carefully. Return of capital is
Versus
more
return
important
on capital.
than return on capital. And it's not quite infinitely more important, but I guarantee you, if you were to break those two things up in 100, like if you had 100% pie, and you were to
Mm-hmm.
break up return of capital and return on capital, I bet return of and this pie being somebody's decision making way of thinking,
Process, yeah.
return of capital is probably 90% of it.
Well, yeah. I mean, nobody wants to give this money, and that's another thing. There's barriers of entry, right? So aside from all the crazy disclosures, usually 50 grand is the minimum, sometimes more. That is a big chunk of money
Yeah,
to
it
put
is.
out,
Yes.
and it's not liquid, right? So it's not like a stock. You can buy it one day, sell it the next. It's scary. So I totally understand why people would be focused on that, wanting to make sure at least they're getting their money back.
Well, and
Yeah.
and that illiquidity is, in my opinion, what that's the government's attempt at stopping the immediate escape of investors in commercial real estate.
Yeah.
Like, because what happened in 08, 09 was, and commercial real estate was really the main, that was really the main suspect in the whole deal.
Yeah.
Was people all of a sudden they were like up, 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 boom, and they pulled their money out. Everybody did
Yeah.
at the same time, right? And so that created that whole dramatic exit we know of
Yeah, but as I tell people, it's not 2008 anymore. And I
It's
mean,
not.
exactly, it's not the same situation. It's not the same market. And by the way, I'm also a residential real estate agent. So I'm also very involved in the residential aspect as
My
well.
wife is
And
too,
so,
so I'm more involved than I want to be for sure.
so you get it. Yeah. So you completely see it. But, getting back to what you were saying about things being scary, what I usually tell people is when we were young, and I'm sure you did and I did, most of us played Monopoly, right? Monopoly was a great way to simplify the power of buying real estate. Would you ever play a Monopoly game, Casey, where you said, you know what? I'm not going to buy any real estate. I'm just going to get my paycheck and then I'll just pay it. I'll pay the rent all the way around the board and I'll get some and I'll do it again. And yet that's what people do. That's what they do, right?
Yep. I'll tell you a funny story. Like my mother was a single mother, like yourself at one point, and I think the only time she ever truly considered kicking me out of the family was when we played Monopoly.
Because you were so good at it.
Well, yeah, and I was always like, "It's called Monopoly, Mom. It's not called loan me $100 so I can make it to the next place. It's called the winner gets it all, right?"
Yeah.
And anyway, and I was just such a pompous ass about always, and I think that's what really drove the nail even deeper was when I would win, I would laugh or whatever, and anyway, it was
Well, I'll tell
all.
you a quick sidebar about Monopoly strategies. So I am from a family of five, so we played Monopoly a lot, but everybody had a different strategy, right? So like my one sister would just buy anything she landed on. And my other sister wanted the really high end stuff like Boardwalk. I would try to get the first stretch, right? Like ideally the Baltic and Mediterranean or the light blues. It wasn't a lot, but you could get hotels on them quick and, bing, grab that $200 every time people come around.
Yep.
And people would laugh because I would win that way. Of course, I would expand my portfolio, but I'd buy cheap and get the hotels out. And it always worked.
Yep, that's exactly right, and it was all about the cash flow, all about the
Absolutely.
cash flow, and
Yes.
it's such an intriguing game because like right there in the last two sentences, half paragraph, you listed like four different strategies, so
Yeah.
buy everything, buy high end, buy low end, live off the
Yeah.
income.
Exactly.
So anyway, no,
Exactly.
it's great. So why don't we talk a little bit about Noblivest? And
Sure.
and tell us a little bit about what you all got going on there, how it got started. I know I believe it or not come also from a real estate sales background, as with most everybody in from the residential space, which I'll tell you, there's going to come a day when I don't have to, when I guess my kids grow up and move out of the house where I can afford to not have to deal with that end of the
Yeah.
business. But so tell us a little bit about yourself and what you all look like right now.
Sure, absolutely. So first of all, I've only been a real estate agent for about 4 years. My background was in corporate market and media research. So I
Oh,
started
awesome.
my job as an analyst at Nielsen TV Ratings. So you've probably heard of them. And I did a lot of analyzing of data and what show was going to perform better and that sort of thing. Then I moved over to the market research side, and I was working with some big companies, like Pepsi and Verizon, and Anheuser-Busch was a big client, doing a lot of like things like focus groups and more qualitative research. So I ended up leaving that industry in 2019 and decided to go full time into real estate. And that's when I got my agent's license at the same time. By that point, I had been investing passively by about at least 3 years, I think, at that point. And so I'd had a little bit of a reserve, but also more importantly, a lot of friends and family, like I did with my friend, were saying, what is she doing with real estate? Like, can you tell me about this? I want to know about this. So I formed a very small company, called MGH Properties, where I was sort of, helping people to invest in that sort of thing. But I wasn't as active with it because I was only one person, right? And I still had to pay the bills. But then my colleague, Christine Shu, my co-founder, and I met. Christine also came from a market research background. I believe she was actually on your show a few weeks back. And we just had a really nice complementary skill set. So we decided to go into business together. So Noblivest, I've been doing this for 6 years. Noblivest as a company is only about 1 year old. But in that time, Christine and I have already done about 4 different deals. We've done a large portfolio of multifamily. We've done a smaller portfolio of multifamily. We're doing a short-term rental fund right now. And we're also talking about doing some RV parks. So we've been fortunate that we have had a lot of opportunities to partner with operators. And because both of us were LPs, we get to partner with the people for the most part that we have invested with personally.
Yeah.
Right. So
Yeah.
I love this industry because there's so much abundance, but it's also relatively small, right? You start seeing the same names around
Yeah. Yeah. And I want to kind of dive in I'm going to worm my way in there,
yeah,
and I'm going to talk to
it's
you a little
fine.
bit about, because we don't get a lot. I certainly understand the idea and the premise of a fund. I think a lot of the listeners probably would like to learn a little more about a fund,
Oh,
because
sure.
it seems like it's a very popular entry point, but it's a very
Mm-hmm.
difficult setup if you're new. Okay. And
Yes.
so I want to specifically, I want to
Mm-hmm.
stop in here and talk about your short term rental fund,
Sure.
not necessarily like what it is.
Like the
We know what it
structure of it.
is, but I want to know, yes. So where are you finding investors? I'm assuming they're probably past investors that you're saying, hey, would you like to continue
Mm-hmm.
the return on your money? Let's go from 123 Main Street, 150 unit complex here, and let's
Yeah.
put your money here, and we're going to be managing it on the short term rental side. So, but from a SEC standpoint and so on,
Mm-hmm.
let's just dig into that. So tell us, what is it
Sure.
called, and how did it get started, and what does it look like?
Sure. So this particular fund is called the Freedom STR Fund, for short-term rental fund. And it is a fund of funds in that, as you mentioned, we're essentially gathering a group of people and we're going in as a single entity into another investment. So there's a couple of things that are a little bit different about it. One is for us as the fund managers, when you have an arrangement where you are a co-general partner on a deal, you have to show the SEC that you're doing more than just capital raising, that you're involved in the asset management of the deal. And for us being up in the Northeast, we can't walk the property. So we're usually involved with marketing, tenant relations, investor relations, that sort of thing. But you have to document and show that you are doing something other than just raising capital. When you do a fund of funds, you don't have to do that because you're essentially just going in as an LP, albeit a larger LP. So in this particular case, we got together a group of investors, and we are going in as this Freedom short-term rental. And there's a couple of reasons or ways that sometimes it's beneficial for investors. So for this particular one, they are only accepting fund of funds, the operator. So it's not like you could bypass a fund and say, I just want to go in and invest directly.
Yep.
But a lot of times, like with the other one, we also did another fund called Eagle Rock that went into the large ones. And with that particular one, the actual opportunity had a minimum of $100,000. We lowered that minimum to $50,000. So
Through your fund, through
our fund. Correct.
Yeah, which allows you, which basically, so I want to point this out for the listeners. So basically, what's happening here is these fund managers of sorts are basically putting the investor relations business back on other people. So they're leveraging networks through. Now, I want to stop you real quick because I heard just yesterday, and maybe you can expand on this, and maybe we need to get a decent legal opinion on it. But I think the SEC is starting to crack down on this co-GP stuff. As well they should, I guess, in a way, because it is seemingly becoming more and more of a pass-through or a bypass for, you know what I'm saying? Like they're going into 506Bs. There's a lot of people going into these 506Bs or 50 as a co-GP, and they're basically bypassing the requirements of the SEC by doing so. And then when the SEC shows up and knocks on their door, they're like, "Oh, wait a minute! Nope, I was down there. I went down there. I've been helping them manage it. We're co-GP." And I just think they're getting ready to
and that's
really
why
crack
you
down
have
on
to be very, very careful, and you have to document everything. I have been to a lot of industry events where people have introduced themselves as, "Oh, I'm a cap raiser." I would never introduce myself that way. I'm always a little bit horrified by that. Like, oh my God, stop.
Matter of fact, the last podcast I was telling you about earlier that I was on, we just had this discussion too. Like, it's almost, the term capital raiser needs to be like almost nixed from our vocabulary really quick, because you're turning into, you're only raising capital and you're being compensated to do so.
Yes,
which means you need to be a licensed individual. And just because you're co-GPing on a deal that's not your deal, and you called the guy and you talked to him about putting lockers in the women's bathroom or whatever, whatever the case is, that's not like an involved co-GP. Like co-GP means you and this other guy found this deal together. You all are both pushing on trying to figure out loans.
Sometimes you've got skin in the game as earnest money. Yeah, absolutely. And I will tell you something, Casey. I also place some of the onus of that on operators, because I've heard that there are operators out there that they really don't want the cap raisers involved, right? Like they want them to raise their money and they don't want them involved in the asset management, but they're putting them at risk from an SEC standpoint if they do that.
Yep. And I think you're way better off to just invest as an LP, gather your money, and go into a position where you're not necessarily risk. Well, you're not necessarily then it's just, then you're not. But then there's also the argument that if you go in as an LP, if I'm a GP of my fund and my fund goes in as an LP and I'm compensated on the upside, am I breaking the law there as well? And so it gets a real hairy really quick.
Yeah, it does. There's a lot of areas where and even as the GP, as you know, you can't be compensated based on what you raise. I mean, you have to have all of this set up front.
And I want to preface all of this with, I should have prefaced all of this with, now's the time to say, we're not attorneys, we're not legal advice givers, we're not anything. If this setup is something you're interested in, please, by all means, go talk to
This is not a
your
DIY. No way.
business attorney, because a couple of things that you have to make sure is this is an entirely this SPV stuff, the special
Mm-hmm.
purpose vehicles talk, which is what we're doing right now,
Yep.
is specifically regulated under the investment acts of the 1940s, right?
Right.
Not the 1930s. So you have to have an attorney that specializes in the investment act of the 1940s in order to capture this SPV. Because if somebody's only versed in the investment acts of the 1930s, they have this running thought that it's an illegal setup. And once
Yes.
you move
And I'm
on
so glad
into
you mentioned that, because not every attorney is in terms of the whole fund of fund model. So you really want to make sure that you are working with one that has a track record, that has worked with these before. You don't want to be anybody's guinea pig. And that's somebody who really understands how this works.
Hi, this is Casey Brown, host of the CashFlowPro podcast and YouTube channel. Have you been thinking about investing in real estate but just don't know where to begin? I'd like to help by inviting you to check out our website at www.3000capital.com. There you will find an array of material that will help you learn all about real estate syndication. And while you're there, be sure to check out our free video series download titled 5 Must-Know Keys to Success in Passive Real Estate Investing. I'd also like to personally thank you for making CashFlowPro part of your day. Now, back to the show. That's right. When we set up our fund, we were very, very, like, we pulled the attorney that we thought was the very best.
Yeah, we did too. We interviewed attorneys
For the money, and then for the knowledge, and then what, like the whole gamut, right? You don't want to burn your whole house down of dollars trying to hire a big expensive Wall Street attorney to try to figure this stuff out. But at the same time, it's very legitimate if you stay in your position as an LP. And that's the whole thing too. Margaret, I don't want control of the
It's a
asset.
big responsibility.
I don't want, I mean, I want to be able to report to my investors what I know. I want to be able to get my investors a better class of stock by pooling their money. That's, I want to do the very basic things that this SPV or fund of funds model was set up and meant to do. There's a reason why I'm doing that. And that's because I don't want to deal with the T's of owning rental property: termites, tenants, trash,
toilets,
toilets. All the T's. I don't want to deal with that stuff.
Yeah. But you made a point that I want to capitalize on, because I meant to mention as well, which is, so aside from the benefits of you can often get in for a lower minimum, you can also get a better preferred rate, right? So if, let's say, I'm going to go in as a direct investor, and with my $50,000, I'll get a 6% return. But anybody who invests $1 million or over might get an 8% return, right? So as an entity, if we go in at $1 million, and maybe it's 20 of us putting in 50,000, we all get that higher pref rate. And best of all, as a fund manager, we shave what we need to off of that to cover our legal fees, right? Because we're not a not-for-profit. So we take what we need to cover the legal fees, and everybody still gets more, maybe 8.5 in that, or 7.5 rather, in that scenario. The legal fees get paid, people get a better preferred return.
That's right. And again, it's not rocket science, but people, entrepreneurs in general, have a tendency to claw their way down the path. And then when somebody says you can't go any further, they're like, oh, but I can go over here, then I can go further. And I mean, we're all somewhat wired the same, and that's entrepreneurs / marketers. We were all those kids who mom was saying,
we asked questions, we challenged, right? Yeah.
That's right.
Well, why? Why is it? Why can't you do this?
And I've got one at home myself. I've got five, but I have one at home myself, and he challenges me on a daily basis.
But you know what? He's got to be super successful.
Right, he is.
They drive you crazy when they're young, but 100%.
And I, if he can keep his work ethic and his mind in the right spot, we're definitely on the right path.
Again, I really think so much of it comes down to schools, right? I wish schools were better at teaching kids to think creatively and be, just think outside the box. And why can't you do things? And it's not just this one size, it's stocks and bonds. And I do have to say really quick, for any of your listeners who have their 401ks or investing in mutual funds. Holy cow, take a look at your reports, please, because they are so laden with fees. And oftentimes these people are making money on trades. So whether you're making money or not, they're making money on every trade. So take a look at how much you're paying in fees. It's crazy.
Yep. That's definitely
But
the
it's
case.
the safe investment, right?
And that's right. And like I said, the moat that Wall Street has built to keep people out and keep themselves in is just absolutely unbelievable. So, all right, listen, Margaret. So we ask a couple of questions to every guest that comes on the show. And the first of those questions is, what is the best book that you have recently read or are currently reading?
So I am actually reading Building an Elite Organization right now. I literally just started, but I'm super excited because I've been hearing great things about it. So I got the book in the journal, and I'll be able to tell you more in a couple weeks once I've dug into it.
Awesome. Great. Cool. Now, what is a dream vacation that you have taken or hope to take?
Oh, Machu Picchu. Top of my list.
Yes.
Boom. That's been on my vision board for like 2 years, and I am going to get there, Casey. I can't wait.
Awesome. Yeah. What a cool, that I would love to. Obviously we've all seen pictures and I
got to do it before my knees give out,
Yeah. Well, true. That's very true. I had have a friend who I graduated high school with, and every year, like him and 8 of his friends, it's one person's turn. It's one person's turn every year, and they do a mystery trip, right? So one person plans this whole thing. One year they went there, and I remember watching it, and
I'm getting there. I'm going to get there.
Highly, highly intriguing. So awesome. Margaret, how can the listeners reach out and get in touch with you if they've heard something that resonated with them, or possibly want to invest in your fund or want to talk?
Sure. Yeah, thank you so much. So I am on LinkedIn at Margaret Kozlark. We have an Instagram, Noblivest, Noblivest for Noble Investing. We've got a Facebook page and an Instagram. And we also, Casey, do a monthly webinar series, just educating people. Just did it last night, talking about investing through a 401k or a self-directed IRA, did depreciation, did all sorts of things, again, just to help people get more comfortable and understand this space.
Awesome. Can you make sure that we have a link to that webinar that we can put in the show notes?
Yeah,
because
sure.
I'll be honest, that's a huge hill that a lot of people have a difficult time climbing, and even I'll be honest. So even my own mother-in-law, right, or my wife's stepmother. So I guess I don't know what she is. She's an in-law, but her and I have gotten together a couple of different times to try and get her IRA set up to be self-directed. It's not just like push a button and here it goes. It's a little bit more involved, and I think a lot of people get lost in that maze. So
and the last thing I'll say about that, it is, and also, a lot of people go the self-directed route because they have a W-2, but if you are a full-time self-employed, you can do something called a solo 401k, which is actually, I think, a better vehicle. So to your point, it's probably talk to a professional, figure out what works for you. And in this webinar, we had a professional last night who was offering a free consultation. So, I'm sure any of the folks could reach out to him as well.
Awesome. Great. Yeah. Make sure we got a link to that so we can put it in the show notes. And
I will. I'll send it right off to you.
As always, please head down and smash that subscribe button. And while you're there, please leave us a review. Leave us a 5-star review and type a review so that others may know what you like, love, and want to learn more about from the CashFlowPro podcast. And I hope everybody has a wonderful day. And Margaret, I can't thank you enough. I know it's tough sometimes to cut time out of your day to do these things, but we got to spread our word, spread our message, and keep moving forward. So Margaret, thank you again. And listeners, I hope you all have a wonderful rest of the day.
CashFlowPro is hosted by Casey Brown, founder and CEO of 3000 Capital, a commercial real estate investment firm committed to providing its investors with ongoing cash flow and helping them build long-term wealth. If you enjoyed today's podcast, make sure to hit that subscribe button so you'll be notified about all our future episodes. You can find more information about us and our investment philosophy by clicking the link in the show notes below. Thanks for listening.